Bloomberg Audio Studios.
Podcasts, radio, news.
Single best idea, and we say good morning to you. Claims came in, 3 days of job data, ADP. Pretty good claims, pretty much on track. It's a fully employed America as a generalization. And the jobs report tomorrow had a lot of good economic conversations today. We'll go beneath the headline date at 8:30 tomorrow as well. I had a number of other good conversations today. I'll make this quick today. We're going to get to Max Kettner, optimistic on the markets. Rebecca Patterson, optimistic on the markets. Omar Aguilar, Charles Schwab, optimistic on the markets. I think there's like a theme there. And we'll talk to Max Kettner about how that ties into the 10-year yield. But first, Lawrence McDonald is someone that everyone reads. He has after his Lehman Brothers days, he's got a report out called the Bear Trap Report. And like you read it once, you read like 10 of his reports, and you have to read them all or skim them all because you know you're going to find one jewel in 5 or one jewel in 10, to the point where Larry McDonald had my essay of the year last year at Bear Trap Report, this long 10,000-word article on what does it mean that there's trillions and trillions and trillions of dollars of just money out there. And I mean, it's all there is to it. It's codified into a new book. I'm going to give you the whole title. This may take the whole podcast. How to Listen When Markets Speak. Risks, Myths, and Investment Opportunities in a Radically Reshaped Economy. It's a radical book in that it's in plain English with lots of appendices and little bullet points in as well. He's got a bunch of muckety-mucks on the back. Mark Cuban, Gillian Tett of the FT, Nell Ferguson, Dr. Ian Bremmer is there as well. And Greg Zuckerman with his wonderful work at the Journal. And the answer is McDonald's always thinking outside the box, and I really recommend to you How to Listen When Markets Speak. Here's Lawrence McDonald on the wall of money personified by passive investing.
Think about passive investing, right? And Jack Bogle's up in heaven, God bless him. But, the Vanguard origination of passive investing. It started with the best of intentions. The best of intentions. But at some point, passive becomes a little bit more evil because there's 35 trillion, at least 35 trillion tied to the index, the S&P. And so when you have a stock like NVIDIA that's now become 5% of the S&P 500, 5%, and it's trading 80% above its 200-day moving average. Meanwhile, the energy sector as a whole is only 3% of the S&P. And so what happens is at some point, too much money is in passive investing. There's not a lot of thinking behind that, and it gets very crowded and what we call herdy, like a herd, and it creates more distortions on the upside, and it'll create more distortions on the downside.
And my point there with Larry that I would add to is it just creates a distance. Years ago, people that were in the market were much more in it, whether they lost money or gained money, and many, many people overtraded and made wrong decisions and bought at the top and all that. And I'm not saying it was a better place, but it was a different place. Is that now so many people, they're just not engaged in the ebb and the flow of the market. We will become engaged on, I believe it's April 12th here in 7-8 days. With the earnings season beginning, we really focus on the major banks there, JP Morgan and others coming out, and then on to the tech earnings and such. But I really take pride in what Bloomberg Surveillance does in giving you the dynamics of free cash flow, the dynamics of revenue and down the income statement. And we'll do that here, acting like active investors. Max Kettner is always active at HSBC. There was a point where he was a little bit cautious in the market, but he's really brought it around to a constructive optimism about what's out there. And he folds it out to where the 10-year yield is. Here's Max Kettner linking equities to the 10-year yield.
What we see at the moment is a bit around actually rates volatility rather than what yields do per se. I don't really care whether the 10 year is going to be at 4, at 5, or at 3, as long as interest rate volatility goes down. That, I think, is the most important thing. And that's what we have been seeing, except for the last 2-3 days, for the majority of 2024, that interest rate volatility was declining quite strongly, and that freed up some risk premium, both in credit spreads and also in equity markets. So in all honesty, even if yields were to stay at these levels, or even if they do trend a little bit higher, which would be contrary to our rates house view, as you've said, well, even if that happened, as long as it's gradual, right? As long as interest rate volatility remains subdued or perhaps goes down even further, that is still really good for equity multiples.
Max Kettner, HSBC, and the idea of Max Kettner in London, linked in with Steve Major in Hong Kong on fixed income is a very powerful duo. Look for that within HSBC literature. I know Steve Major was a very large presence out on LinkedIn as well. Our social media is LinkedIn and X. Eric, did you know I got a blue star overnight? Elon called me up. He says, I'm such a hitter. No, he said it was just because of the bow tie. Elon called up. He said, I'm giving you a blue star. And me and a lot of other people. So what in God, do you have any idea what they're doing?
Not necessarily.
I have no idea. Yeah, but all of a sudden X is like throwing around blue stars, and I have no idea what that means. What I know is we are out on Twitter, and we're out on LinkedIn as well, trying to give you the perspective of many of these good people like Max Kettner and, of course, Larry McDonald at the Bear Trap Report. That book, again, How to Listen When Markets Speak. Big day tomorrow, the jobs report. We are out then on Bloomberg Radio. Sweeney mentions we have to mention Bloomberg Radio, which we do. And also on Apple CarPlay. Can't say enough about it. The Bloomberg Business app, download it for free. And it gets you into Apple CarPlay. It's safer. It's better. It's also clearer, which is, good sonics and fidelity and all that. And on YouTube, growing every day, you go and you search Bloomberg Podcasts. We're working on that. Are they going to put our ugly face on there, Eric? It was one day. It's going to be there. But it says Bloomberg Surveillance, and you click on it at 7:00 Wall Street time, and that gets you to us with a live chat, which is actually very, very informative. I got run over today, folks, because we were doing Beyonce's new album, and we were doing Jolene, and I did Matreka Berg from 1997, which is great. The just iconic singer-songwriter from Nashville. Oh, my word. The Miley Cyrus people showed up and said, I promise I'm going to listen to Miley Cyrus, Jolene. I'll do that this weekend. Tomorrow, the jobs report. That will be our single best idea.